That's what I'm using right now on the chart, one moving average. And this is some of the most powerful things you can use for entries, exits, and momentum. Entries, exit, momentum. This is some of the most powerful things you can use out there. So whenever I'm looking at these markets, I'm looking at, is it a good time to buy? Is there a caution that we might get a pullback? And where is overall momentum? So if I take off all the moving averages or all the trend lines on the chart here, and we can see what we're seeing right now in the market here, right? One thing you'll notice is what? We don't ever get too far away from the moving average before we go through at least a bit of a short-term correction. So even in a very big bull market, right, if I right, as you can see, even in a very big bull market, the market will that'll be the moving average there, right? That'll be the moving average through there. But then what ends up happening, right, is that then the market will do something like that, right? And then it'll get too far away from the moving average, and guess what will happen? Then it'll end up coming back to it. This is what's called price and time with Gann that I've learned from Gann. The Gann analysis is what? When we've done too much price, there's a lot of energy used there. And this is where, like, as the markets get too far away from the moving average, we've done too much movement. We just need a little bit of a correction, not a top, but we just need a little bit of a correction, right? And this is where we use the 52 moving average here. And then it comes back to the moving average. The moving average is trending up. This is the sweet spot to buy, because then we go for another move and then we end up going for another correction there. And as you can see, this is what ends up happening through bull markets and bear markets when we're in this here.